We are talking about Ripple and its native digital asset XRP. The question we're tackling is one that gets thrown around in forums, on social media, and in private investment groups every single day. How much XRP would you actually need to hold to cross that life-changing threshold to become a cryptocurrency millionaire? And we're not talking about some far-off, distant future. We're putting a pin in the calendar. By the end of this year, 2025. Now, I want to set the stage properly. This won't be your typical surface-level crypto video. We're not going to just glance at a chart and throw out some random numbers. Over the next several thousand words, we are going to meticulously unpack every single facet of the XRP ecosystem. We will journey through its turbulent legal history, dissect its groundbreaking technology, and scrutinize the strategic partnerships that could reshape the very fabric of global finance. More importantly, this is not a video where I'll be sitting on the fence. I've spent countless hours digging through the data, the court documents, the financial reports, and the expert analyses. And based on that mountain of evidence, I'm going to take a definitive stand. I will tell you not only what I believe is possible for XRP's price by the end of this year, but also what that practically means for you, the investor. I'm going to connect the dots between Ripple's corporate strategy and the potential value of the token in your portfolio. So, this is your invitation to a masterclass on XRP. Find a comfortable seat, eliminate distractions, and prepare to dive deep. We have a lot of ground to cover, and every piece of the puzzle is crucial to understanding the monumental opportunity that may be staring us right in the face. Let's begin. First, let's ground ourselves in the reality of the present moment. Before we can talk about the future, we have to have an honest understanding of the here and now. As of today, June 11th, 2025, the price of one XRP token is fluctuating around the $2.29 mark. It's a figure that represents a long and arduous journey, a testament to both its resilience and the powerful forces that have suppressed its growth. At this exact price, the math to become a millionaire is straightforward but daunting. To have a portfolio valued at $1 million today, you would need to hold approximately 436,681 XRP. For the average person, accumulating that amount of XRP at the current price represents a significant capital outlay of nearly $250,000. It's an investment on par with a down payment on a substantial piece of real estate or a hefty stock market position. But, as we all know, no one is here because they think the journey ends at $2.29. The entire thesis, the entire reason the XRP community, the formidable XRP army, has remained so steadfast, is the belief that this current valuation is a coiled spring, held down by artificial pressure that is just now beginning to be released. To truly grasp the potential for a future explosion in price, we have to look back at XRP's history. It's a history written in dramatic peaks and harrowing valleys. Many veterans of the crypto market will remember the euphoric bull run of late 2017 and early 2018. During that frenzy, XRP soared to its all-time high, touching an incredible $3.84. In those fleeting moments, the dream of XRP as a top-tier digital asset felt fully realized. Early investors saw their holdings multiply at a dizzying rate. However, what followed was the brutal reality of a prolonged crypto winter, a multi-year bear market that tested the conviction of even the most ardent believers. The price retraced, and the market sentiment soured. And just as things started to look hopeful again, the real storm hit. In December 2020, the U.S. Securities and Exchange Commission, the SEC, dropped a bombshell lawsuit on Ripple Labs and its top executives. The accusation was that Ripple had conducted a $1.3 billion unregistered securities offering by selling XRP. This lawsuit was not just a legal challenge. It was an existential threat. It cast a long, dark shadow over XRP, creating a cloud of fear, uncertainty, and doubt. The dreaded FUD that would persist for years. The immediate fallout was catastrophic. Major U.S. exchanges like Coinbase and Kraken, fearing regulatory repercussions, delisted XRP. This cut off a vital artery of liquidity and accessibility for U.S.-based investors. The price predictably tumbled. Institutional interest, which had been slowly building, evaporated overnight. For the next several years, while other cryptocurrencies like Bitcoin and Ethereum went on to new all-time highs, XRP was left behind, shackled by legal uncertainty. Throughout this entire period, Ripple fought back, arguing vehemently that XRP is a commodity, a currency, a technology tool, anything but a security. The legal battle was complex and drawn out, with every motion, every discovery, and every judicial comment being scrutinized by the entire crypto world. The case of SEC v. Ripple became more than just a fight for one company. It became a landmark battle for the soul of the entire American crypto industry, a fight for regulatory clarity. And then the tide began to turn. In a landmark ruling, Judge Annalisa Torres delivered a verdict that sent shockwaves of relief and vindication through the XRP community. She ruled that Ripple's programmatic sales of XRP on public exchanges, the way most retail investors acquire the token, did not constitute the sale of securities. This was a monumental victory. It validated the long-held argument of the community and provided a legal precedent that distinguished the token itself from the manner in which it was sold by the company. Following this ruling, the floodgates reopened. Exchanges, led by Coinbase, rushed to relist XRP, bringing back a massive pool of liquidity and investor demand. The price saw an immediate and significant surge. And now, in the summer of 2025, we are witnessing the final act of this legal drama. A settlement has been reached. While the specific terms involve a financial penalty for Ripple, the critical outcome is the removal of the crippling uncertainty. The war is over. The cloud of FUD that has suppressed XRP's price for so long is finally dissipating, revealing a clear sky ahead. This legal clarity is the single most important catalyst, the foundational event that unlocks all the potential we are about to discuss. With the lawsuit effectively in the rearview mirror, it's crucial to understand that Ripple didn't just sit idly by, waiting for the courts. For the past several years, while the legal team fought in the courtroom, the business development and engineering teams have been relentlessly building, forging partnerships, and expanding the utility of the XRP ledger on a global scale. This is the fundamental, value-driving activity that will fuel the next leg of XRP's journey. Let's talk about the sheer gravity of Ripple's partnerships. These aren't just vanity announcements. They are deep integrations with the behemoths of the traditional financial world. The most recent and perhaps most profound example is the partnership with Guggenheim, a global investment and advisory titan managing trillions of dollars in assets. Guggenheim's treasury services are now set to issue digital commercial paper directly on the XRP ledger. To understand why this is a seismic event, you need to understand what it represents. This is the tokenization of real-world assets, RWAs, on an institutional scale. Commercial paper is a multi-trillion-dollar market. By choosing the XRP ledger, Guggenheim is giving a colossal vote of confidence in its security, scalability, and efficiency. Ripple's $10 million investment into this venture underscores its commitment. This isn't a pilot program. It's the beginning of a new financial paradigm where traditional assets are born, traded, and settled on-chain, and the XRP ledger is a prime venue for this revolution. This single partnership provides a powerful counterargument to the old, tired critique that no one is using XRP. It demonstrates a clear and high-value use case for the underlying technology. And Guggenheim is just one piece of a much larger puzzle. Ripple has established a vast network of over 100 partners across the globe, including major players in banking and payment processing. The core of this network revolves around Ripple's flagship service, on-demand liquidity or ODL. For decades, sending money across borders has been a painfully slow and expensive process, reliant on a convoluted system called correspondent banking. This system requires banks to hold large sums of money in foreign accounts, known as Nostro and Vostro accounts, just to facilitate payments. It's inefficient, capital-intensive, and slow. ODL, with XRP at its heart, obliterates this archaic model. Imagine a bank in the US needs to send a payment to Mexico. Instead of going through the old system, it can instantly convert US dollars to XRP, send that XRP across the XRP ledger in 3 to 5 seconds, and have it instantly converted into Mexican pesos at the destination. XRP acts as the bridge, a universal translator for value, eliminating the need for pre-funded accounts. The speed of the transaction means that the financial institution's exposure to XRP's price volatility is negligible, completely neutralizing one of the oldest criticisms against using digital assets in banking. As more payment corridors are opened and ODL volume increases, it creates a constant, utility-driven demand for XRP tokens. But Ripple's ambition extends far beyond just improving payments. They are strategically positioning themselves at the forefront of the next evolution of money. Central bank digital currencies, or CBDCs. Governments worldwide are actively exploring the creation of digital versions of their national currencies. Ripple is already engaged in pilot programs and consultations with several central banks, including those in Palau, Bhutan, and Hong Kong. They are offering a platform for these central banks to issue, manage, and transact their CBDCs. The XRP ledger, with its inherent security and scalability, is a perfect neutral ground for the seamless exchange between different CBDCs in the future, potentially making it a foundational layer for the next generation of global finance. And to top it all off, Ripple recently launched its own US dollar-backed stablecoin, RLUST. This move is a strategic masterstroke. It directly competes with giants like Tether, USDT, and Circle, USDC, but comes with the huge advantage of Ripple's reputation for regulatory compliance and its vast network of financial partners. The RLUST stablecoin will bring immense liquidity and activity to the XRP ledger, creating a robust ecosystem for decentralized finance, DeFi, applications. This, in turn, strengthens the entire value proposition of the ledger and creates more indirect demand for its native asset, XRP. Now we arrive at the heart of the matter for any investor: the numbers. To make an educated guess about the future price of any asset, we must first understand its supply and demand dynamics, or its tokenomics. This is where many critics of XRP often miss the bigger picture. The first number they'll point to is the maximum supply, 100 billion XRP. On the surface, this seems enormous. However, this number is misleading if not properly contextualized. Firstly, the entire supply is not in circulation. A substantial portion, nearly 40 billion XRP, is held in a cryptographically secured escrow account managed by Ripple. This escrow operates on a predictable schedule, releasing 1 billion XRP each month. Crucially, any portion of that monthly release that is not used by Ripple for things like partnerships or investments is returned to a new escrow account, set to be released at a later date. This prevents the market from being flooded and creates a predictable, transparent model of supply distribution. The second, and perhaps more powerful tokenomic feature is the burn mechanism. Every single transaction on the XRP ledger requires a small fee, paid in XRP. This fee isn't paid to a miner or a validator. It is permanently destroyed, burned from existence. While the fee for a single transaction is tiny, a fraction of a penny, the cumulative effect is significant. With millions and eventually billions of transactions occurring, this mechanism acts as a deflationary force. Every time someone uses the network, the total supply of XRP decreases slightly, making every remaining token incrementally scarcer and, therefore, more valuable over the long term. So, with legal clarity achieved, powerful partnerships scaling up, and solid tokenomics in place, where do the experts see the price of XRP heading by the end of 2025? I've aggregated a range of predictions from leading blockchain analysts, financial modeling firms, and seasoned crypto veterans. The consensus is overwhelmingly bullish, though the targets vary. On the more conservative end of the spectrum, many analysts see XRP decisively breaking its previous all-time high of $3.84. They project a year-end price target in the range of $3 to $5. Let's translate that into our millionaire by year-end scenario. At a price of just $3, your millionaire journey would require you to hold 333,333 XRP. If the price reaches $5, that number drops significantly to 200,000 XRP. For many who have been accumulating during the downturn, this target is already well within reach. However, a growing number of analysts believe that this conservative range fails to account for the perfect storm of bullish catalysts aligning for XRP. These more optimistic, yet entirely credible voices are projecting a price target between $8 and $10. They argue that the end of the lawsuit, combined with a full-blown crypto bull market and new institutional products, will create an exponential surge in demand. At $8 per XRP, The magic number to become a millionaire becomes 125,000 XRP. And at the coveted $10 mark, you would only need 100,000 XRP. This is the price level where we would see a significant number of long-term holders achieve life-changing wealth. But there's one more factor, a potential catalyst so powerful it could render even the $10 prediction conservative. The approval of a spot XRP exchange-traded fund, or ETF, in the United States. We have already witnessed the monumental impact of the Bitcoin and Ethereum ETFs. They provided a regulated, secure, and incredibly simple on-ramp for a tidal wave of institutional capital. Pension funds, hedge funds, and asset managers who couldn't or wouldn't buy crypto directly from exchanges were suddenly able to gain exposure through a familiar investment vehicle. In their first few months alone, these ETFs saw tens of billions of dollars in net inflows. With the SEC lawsuit resolved and XRP's legal status as a non-security clarified for secondary market sales, the primary obstacle to an XRP ETF has been removed. Major asset managers like BlackRock and Grayscale are already poised to enter the space. The probability of an XRP spot ETF being filed and approved by the end of this year is now incredibly high. An ETF would create a demand shock for XRP. Billions of dollars in new capital would be chasing a finite supply of tokens, and the basic economic law of supply and demand dictates that the price would have to rise dramatically to find a new equilibrium. So, after laying out this extensive body of evidence, the legal vindication, the world-changing partnerships, the deflationary tokenomics, and the looming possibility of an ETF, it is time for me to take a stand. I want to be unequivocally clear. Based on my comprehensive analysis, I believe that a price target of $7 to $12 for XRP by the end of 2025 is not just a hopeful fantasy, but a probable outcome. I believe the combination of catalysts is too powerful to ignore, and that we are on the verge of a historic price revaluation for XRP. This is not a guarantee. There are no guarantees in any financial market, least of all in cryptocurrency. You must always do your own research and never invest more than you are willing to lose. But the case for XRP is, in my opinion, one of the most compelling investment theses in the digital asset space today. So let's circle back to our core question and run the numbers based on my conviction. How much XRP do you need to become a millionaire by the end of this year? If XRP hits the lower end of my projected range at $7, you would need to hold approximately 142,857 XRP. At today's price of $2.29, acquiring this amount would represent an investment of about $327,142. If XRP reaches my mid-range target of $9.50, you would need to hold around 105,263 XRP. That's an investment of roughly $241,052 at today's prices. And if XRP achieves the upper end of my prediction, hitting $12 by the end of the year, you would need just 83,333 XRP to cross the $1 million finish line. Today, that amount of XRP would cost you approximately $190,832. These numbers illustrate a powerful potential return on investment. The narrative is no longer about if Ripple's technology will be adopted. It's about how quickly and how broadly. We are moving past the speculation and into the utility phase. The investment thesis for XRP is not about hype. It's about its integral role in the modernization of our global financial plumbing. For those of you in the XRP army who have held on with diamond hands through years of FUD and price suppression, your conviction is about to be tested in a different way, by the temptation to sell too early. For those who are just now considering an investment in XRP, you are looking at an entry point that may, in hindsight, seem like an incredible bargain. The path forward will not be a perfectly smooth, straight line to the moon. We will see volatility. There will be sharp pullbacks and periods of consolidation designed to shake the conviction of impatient investors. But for those who can see the big picture, who understand the fundamental value being built, the destination appears increasingly clear. To conclude, the potential for XRP to create a new wave of millionaires by the end of this year is, in my firm opinion, very real. The shackles are off, the engine is built, and the fuel, in the form of institutional capital and real-world utility, is being pumped in. I've laid out my case and I've taken my stand. Now, the conversation is yours. I want to hear your thoughts in the comments below. What is your year-end price target for XRP? Do you think my $7 to $12 range is too conservative or too optimistic? What key factor do you think will have the biggest impact? Let's have a robust and intelligent discussion. If you found this exhaustive analysis valuable and it helped you see the XRP landscape with more clarity, please show your support by hitting that like button and make sure you subscribe and ring the notification bell. You won't want to miss the follow-up content as this incredible story continues to unfold. Thank you for dedicating your time to this deep dive. Stay informed, stay patient, and I look forward to seeing you all in the next video.